Netflix is absolutely crazy. In my opinion, with this one deal, they're going to crush Disney and YouTube. I wouldn't be surprised if in the next 5 to 10 years they monopolize the entire entertainment industry worldwide. But first, we have to talk about Disney, their arch nemesis. They were very successful because of the Marvel Cinematic Universe. In 2009, they bought Marvel for $4 billion. That was a success. Then they also bought Star Wars for $4 billion. And when that was also successful, they eventually bought Fox Entertainment for $71 billion. For most people, this seemed like the end game. One brand that would monopolize the entertainment industry going forward. There won't be anyone who can beat Disney. But in December 2025, a more bombastic deal emerged. Netflix finally officially acquired Warner Bros. Discovery. That's the company that houses IPs like Batman, Superman, the entire DC universe, and Friends, valued at $82.7 billion. That's bigger than all the Disney acquisitions I just mentioned. But does buying Warner Bros. Mean Netflix will monopolize the entertainment world? Disney is still strong, the cinemas are always packed. So why did I say at the start of this video that Netflix would crush YouTube? This is what many people don't understand. The world has changed, the entertainment industry is now judged by streaming. Let's break it down one by one in Chapter 1, The Future of Entertainment. Because in essence, Netflix's biggest enemy isn't Disney, it's YouTube. Looking at data from 2024 to 2025, the number one in the online video and streaming industry is actually YouTube, followed by Netflix, then Disney. And when compared to the cinema industry, its value is only about $33 billion and it's stagnant. The streaming industry is $226 billion, 6 times larger than the box office industry. So you could say whoever wins the streaming market will win the entertainment industry. Then if we break down the 200, number one is YouTube at around $43 billion, followed by Netflix with $39 billion, the king of premium streaming. As big as Disney is, when they launched Disney Plus, it was still around $20 billion and not yet profitable or with very thin margins. Because they're struggling in a tug of war with Netflix over technology, data, and distribution. And if you ask why YouTube can win, it's because their mass market strategy made YouTube the platform with the largest video library in the world. If you want to make money from ads, you need to keep customers watching continuously and the content never runs out. Whereas if you go to Netflix, you might binge 1 or 2 series and eventually you'll run out. That's why we need to break down this Warner Bros. Deal. Why does this make Netflix able to overpower YouTube? Even though Warner Bros. As a company is struggling, it's already dying. It's like a house filled with luxurious antiques, but the roof leaks, the floor is seeping, the walls are fragile, and they're being chased by debt collectors. Now we move on to chapter The Deal. It's natural for people to ask, why would Warner Bros. Want to be sold to Netflix? Such a legendary company finally bows to a tech company that's really just a seedling compared to other entertainment industries. The simple answer is, they're dying. Warner Bros. Discovery is a company formed by merging these companies which quote-unquote are not very successful. In the end, their debt piled up to about $37 billion. So they pay trillions in interest every year. Their films like The Flash, Shazam 2, Justice League are actually significant losses in terms of calculations. Not to mention their gaming division, Suicide Squad, Kill the Justice League, which I actually like, that cost them a $200 million loss in that quarter. The IP is good, but the execution has many blunders. Plus, their business model is outdated, still relying on cable TV from HBO, CNN, TNT. When they made a streaming platform called HBO Max, now just Max, it's still far behind in scale compared to Netflix and Disney. So Warner Bros. Is selling not because they want to, but because they have to. You have to save the antiques in your house. So this decision is simple for them, but the decision from Netflix's side is actually more complex, which relates to the business model, how they plan to crush YouTube, not just Disney. We move on to chapter 3, the strategy. In the online streaming industry, content is king, distribution is queen. So you have to have both. Netflix excels in distribution. Their technology, data, and algorithm-based content are insane. But on one hand, their IPs, although some are successful like Stranger Things, Squid Game, are IPs that haven't stood the test of time. Not like IPs such as Harry Potter, Batman, which have lasted decades and could perhaps endure for hundreds of years. That's called a legacy. And ultimately, these two things, what has always been important for Netflix? Subscribers. The more subscribers, the more money they make. But they've hit a snag on one thing. In developed countries, they're very successful. People don't think twice about paying $10 to $20 a month for a subscription. But in markets like ours, India, and some developing countries, they lose badly to YouTube. YouTube is free and has ads. That's why not many people know. But Netflix's strategy is actually starting to target markets with less money through their quiet pivot. They create affordable subscription packages with ads. The crazy thing is, there's a market study. In 2025, Netflix's ad revenue is projected to reach $4 billion. That's already 10% of Netflix's total corporate revenue, with growth doubling every year. But going back to the issue I mentioned earlier, if you want substantial ad revenue, you need a never-ending content library. Meanwhile, Netflix series are usually limited. 8, 10 episodes, and then you wait months or even years for the next season. But if they buy Warner Bros., series like Friends already have 236 episodes. The Big Bang Theory already has 279 episodes, so the content never runs out. And here's something unique based on research. Most Netflix viewers don't spend their time on new movies, but rewatch old ones. So this is their final key. Plus, the only IP that can beat Disney's Marvel is DC, but it hasn't seemed as successful as movies like Iron Man, Doctor Strange, and their friends. At first glance, from this explanation, it seems like the end game for the entertainment industry. Netflix will become the king. But businesses at this large scale eventually run into politics. Even though they've already signed a deal with Warner Bros., suddenly there's something called a hostile tender offer. Someone is trying to take over this deal. And yes, it has something to do with President Trump. We enter Chapter 4, the Trump card. So Netflix's $82 billion deal isn't all cash. It's a mix of cash and Netflix stocks. Then suddenly, a few weeks later, an offer from Paramount appeared. The CEO is the son of Larry Ellison, the second richest person in the world who owns Oracle. But that's not the interesting part. Behind this deal to overtake Netflix is a fund called Affinity Partners, owned by Donald Trump's son. Then everything connects, because when Netflix wanted to acquire Warner Bros., the US regulator DOJ and Donald Trump openly said, "Whoa, this is dangerous, it's a monopoly." Netflix is a great company, they've done a phenomenal job, but it's a lot of market share, so we have to see what happens. It turns out they want his son to get in on this deal. This is even an official statement. If Paramount buys Warner Bros., it wouldn't be a monopoly, it would be healthy competition. It's the classic narrative. The government says it doesn't want a monopoly, but in reality, this is just helping their family and friends get a good deal. Because it's hostile, it doesn't go through Warner Bros. Management. He makes a direct open offer to all shareholders. And Paramount's deal is $100 billion in full cash. Which company wouldn't want full cash? Because if exchanged for Netflix shares, the stock could go down and it might not be sellable. You could say this is the last hurdle Netflix needs to clear before they're on track to monopolize the entertainment industry. This is an important lesson. At the $100 billion level, business is politics. In my opinion, this is an interesting business story and lesson, but what's the impact on us, the everyday people? In my opinion, the winners will be IDYC and LK21 because Netflix prices will go up. We enter Chapter 5, the impact on us. Netflix's biggest problem is called churn. It's a business term for when people who previously subscribed cancel their subscription. And what's always a problem is when Stranger Things came out, people subscribed for a month to watch it, then switched their subscription to Disney Plus and others. But with this Warner Bros. Deal, if there are a lot of IPs, and according to the data, people watch Netflix to rewatch old movies, the number of people canceling their subscription will be very low. And because there's so much content on Netflix, they can raise prices as they like. Secondly, Netflix always creates content based on algorithms. What's trending, what viewers like. So it seems like the movies and series they make play it safe. Not much is truly experimental like in the blockbuster industry generally. And thirdly, what about the fate of the entertainment industry and cinemas? Previously, it would usually be shown in theaters for a month before going to streaming. But if they go all in on streaming to also get ad revenue, the movie might only be in theaters for 2 weeks and then suddenly appear on Netflix. This is all that could happen if Netflix ends up monopolizing the entertainment industry. Could this happen? I think it's possible. At least they're trying. I'm 100% sure their government relations and PR division are sucking up to Trump to get this acquisition approved. Because I think it's the end game. They buy Warner Bros.' most expensive assets, allowing them to get more ad money. Plus, smartly, Warner Bros.' bad assets like TV and others need to be separated first before being bought. But that's why this is a dilemma. Are you in the pro-merger camp thinking it's fine to just have one subscription since all the content is there? Or are you on the team that disagrees with this merger? Because the more options there are, the better it is for consumers. Either way, this could be a masterclass in business strategy in an industry that's booming like crazy. Perhaps more conspiratorially, if one platform can keep us glued to their content for hours, they can, in a way, control the public narrative. But that might be a topic for another discussion. What do you guys think about this Netflix deal? See you guys in the next video. Bye-bye.